Our hog market analyst this week is Iowa State Extension livestock economist Lee Schulz. According to the recent USDA quarterly Hogs and Pigs report, the United States hog inventory of all hogs and pigs as of June 1st was 73.5 million head. That's up 1% from March's report, up 3% from last year, and is the highest June 1st inventory since estimates began in 1964. In addition, breeding inventory and the hog market inventory were both up by 3% from last year. We talked with Lee on Monday and began by asking him for his analysis of the report.
Well, last couple of reports, there hasn't been too many surprises. They were very much within pre-report expectations. And I would couch this report as really the first one that kind of threw us a little bit of a surprise. And it really came in that breeding herd. And we can talk a little bit more about that. But as we walk through some of the other estimates, I think when you look at the market hog inventories, that was very much within pre-report expectations. The breakdown of those inventories really suggests slaughter should be as we expected. If there was maybe a little bit of surprise, it was that near market ready category. And that's going to be the slaughter really mid-July through August. That could be a little bit heavier than anticipated, but I don't think that's really going to cause all that much of a shock to the market, as really we've seen those numbers within pre-report expectations.
Why do you think that was a surprise?
Well, I think the surprise came with that breeding herd. And when this number came, 3.5% year-ago levels, I think that was really a surprise to many. If you put that into a bit of a context, the last time we added over 100,000 breeding herd additions to the inventory from March to June was back in 1997. So it's been several years since we've added that many over one quarter. Also, you really can't take this report at face value when you look particularly at the farrowing intention numbers. So right now, farrowing intentions for June and August, and then September and November were only 1.5% above year-ago levels. With the size of the breeding herd, those numbers are going to have to be much larger. And so we're looking at farrowing intentions well above 2%. And so that makes pig crops much larger. And to show where that impacted here this last quarter was that the March-May actual sows farrowing came in 43,000 sows higher than what USDA anticipated back in March. If you put that at commensurate pigs per litter at 10.63, that gives us a larger pig crop of about 460,000 pigs. That's about one slaughter day. So we're going to expect about one more slaughter day in the fourth quarter of the year. Now we have the capacity to handle that, but that is going to pressure prices because numbers are much larger than we expected and come at a time of the year where you see relatively large slaughter numbers.
Let's talk a little bit about the demand. Where do you see that?
Well, I think in this period of larger supplies, we have to be thankful for the demand situation. Domestically, demand has been great. We're seeing prices nationally for pork at about $3.75 per pound. If you look at the first 5 months in 2017, it was $3.69 a pound. So we're paying higher prices for pork, and we're actually consuming more pork. So per capita consumption's up about 1.5% the first 2 quarters. So that's a very good sign for domestic demand. At retail, we're seeing featuring rates very high. So store circulars have a lot of pork that they're offering at very competitive prices when you look at the whole retail meat case. Also, exports have been up so far 9%. Now, we only have data available through April. We'll get the May data next week. But 9% is very important, that growth, because we have such larger supplies. We're up in production about 4% so far here in 2018. So we need those exports to really absorb this added production.
Do you think this trend is going to continue?
So I think when you look at the export market, USDA right now is projecting about a 6% growth. So we're definitely on pace for that through the first 4 months of the year, but also realizing that a lot of this data is not capturing the issues we've seen potentially with trade in the talks of tariffs, and those tariffs actually coming into place here starting in July. And so I think this is something we're really going to monitor. We're seeing right now, for example, Mexico is up 7% year to date in pork trade, but how do tariffs impact that trade? You could say similarly with China being up 14% for the year. You could see potentially tariffs having a large impact there. I think the real star market here has been South Korea, up 42% year over year. So that's really been carrying a lot of that momentum when we look at exports by volume.
What do you think about the price and profitability forecast?
I think when you look at 2018, we're definitely taking a step back, both as far as prices and profitability. My price projections for the next 4 quarters, so the third quarter of 2018, is in that 67 to 71 range. Fourth quarter, all the way down to 52 to 56. As we look at the first quarter of 2018, I think we're in that 58 to 62 range. And then the second quarter of 2019, I think we're looking in that range of probably 62 to 66 in general. For profitability-wise, profitability has much taken a step back from 2017, where we've seen fair-to-finish operations average about a $12 per head profit. Here in 2018, it looks to be about a break-even profit, with large losses expected in the fourth quarter of the year, about a $25 per head loss. Now, that break-even profit does cover all economic costs, so producers can operate in that environment, but not long term. So I think we're really potentially going to see an impact on production if we see these losses continue from fourth quarter into 2019.